Hello, everyone, and welcome to the first edition of Honeycomb Digital Investments' new show, Digital Asset Insights. My name is Baxter Hines. I am the Chief Investment Officer of Honeycomb Digital Investments based in Dallas, Texas. And I want to welcome you to this exciting moment for our coverage of the digital asset space. In my book, Digital Finance, Security Tokens and Unlocking the Real Potential of Blockchain, I discussed my vision of how blockchain was going to disrupt the financial industry. And one of the key takeaways that I wanted readers to realize was that Bitcoin and cryptocurrencies were really just one, a major portion of what the blockchain would offer to us as a society. And I spent a huge amount of time talking about how real assets would start going onto the chain and be traded, tracked, and managed in a much better, faster, cheaper way than what we are accustomed to today. Well, the first real innovation that came out in that respect was putting the currencies that we use, the dollar, the yen, the euro, onto the chain and being able to therefore have them on the digital rails, and therefore you could trade in a cheaper and faster way. So we're seeing today just an explosion in the amount of digital currencies that are out there. You may hear the term stablecoin used. That's just a way to where many people will say that an asset is backed by something on the blockchain, and they are usually referring to the dollar or the euro or some other major currency. But today, the US dollar is what dominates these kinds of products. And again, we have gone from basically no money on the chain to over $100 billion today. When I was first starting to deal with these types of assets in 2019, there was about a billion, maybe 2 billion of these types of coins. And it just seems like month after month, you have just this breakneck type of speed of adoption. It's been an incredible set of growth. And I think you're going to continue to see more of that as time goes on, especially as central banks around the world start to put their currencies onto the blockchain. That's already starting to unfold in countries like China, the Bahamas, and other nations around the world. And the US is contemplating it. But what's going on now is we are seeing that banking institutions are the ones holding these stable coins, or they are holding the assets that back the stable coins. And that is causing a dilemma for regulators, because as more and more money goes into this new form of financing, the risks around that to the overall financial system become greater and greater and greater. And so that there is this need to create laws or to create rules by which the major platforms like Tether or the USD coin, how they are governed. And so we are starting to see the first really big kind of back and forth between the banks, between the platforms that issue these stable coins, and the regulators here in the United States are looking to treat these assets. So I want to cover that today. But before I get into a lot of detail, I want to just discuss what a stable coin is. Basically, it's like any other type of real asset going onto the blockchain. What you are doing is you're taking the asset itself, you are giving it over to a custodian, in this case, a bank, and then they are taking those dollars and creating an equivalent amount of stable coins. So let's say you have $500 that you want to put on the blockchain. You would deposit that with a depository bank that is affiliated with a stablecoin network, and then they would give you 500 tokens. Those tokens could then be moved around on the digital rails, and they could also at some point, depending on the features of the particular stablecoin, but let's use, say, USD coin, for example. That's widely used. That's the one that I use. You can then go back to the bank, give them your tokens. The tokens will then be burned or taken out of existence, and your dollars will be returned to you. So this is a very interesting new concept. It's very similar to what we see with ADRs here in the United States, stocks for foreign companies, like you wanted to buy Toyota stock or you wanted to buy Royal Dutch Shell, something like that. You can buy them here in the US markets as an ADR, and that ADR, it's an American Depository Receipt, and it's just that. It's a receipt that a trust company, like say State Street or Bank of New York Mellon, it says they hold an equivalent number of shares of, again, Toyota or Shell that are traded in London or Tokyo or wherever they may be based in their vaults, and you have the right to redeem those should you please. That's the basics of how a stablecoin works. And you might ask, well, what does a stablecoin get me? What do I benefit from that? Well, because of the nature of the blockchain, again, it's better, faster, cheaper mechanisms that it runs under. You can move money around in a much more efficient way than you can today. So just to give you a quick example of what I'm referring to. So I loaned some money to my personal trainer. He was creating a gym here in Dallas. And I told him, hey, I'm going to give you this money. Let's go to the bank and get the forms notarized. And then you'll have the money to put into your business. And we had all of our terms set up like any standard type of loan would be. And when we got to the bank, this was on a Thursday afternoon, and I handed over the check to the teller at the Chase Bank. And my trainer said to the teller, when am I going to get the money? And the teller said, hey, it's after the cutoff here on Thursday, and we've got a weekend coming up, so you'll probably get your money on Wednesday. Well, my personal trainer pushed back and said, can you make it a little bit faster? And the teller said, I don't think so, because Baxter's check is from Wells Fargo and we're Chase, and so it's going to take a lot of processing time. Well, that's, I'm sure, the stated reason, but the reality is our systems of payment are very antiquated, and it takes a lot of time to do something simple like transferring money. With the blockchain, if I were going to send something to my personal trainer, I could do it almost like that, not quite that fast, but it's going to get there. He could have had the money within minutes, and probably for a lot lower fees than it would be if I were to wire him. If you were to wire today, I actually had to do it earlier this week, and it was probably about $35 for no service whatsoever. So people are going to continue to gravitate towards the blockchain to cut out time, to create a better audit trail, to cut out intermediaries and centralized organizations, and to just overall cut out costs. So I believe that stablecoins will continue to be here for the long term. And we're seeing big companies that are trying to do this. For example, Facebook has its project called Diem that they announced back in 2019. It looks like now here we are in September of 21, they are going to go ahead and put out digital dollars, digital euros. That's really an important development, because with Facebook's user base and its global reach, they can launch a product like that and make it hit an incredible number of users very, very fast. So this, again, is putting the regulators into an interesting situation, because the banks that are holding this money, there have to be questions around what are they doing with it? Are they safeguarding people's interests? And most importantly, if people want to redeem those dollars, those stable coins, into dollars or yen or euro or whatever it might be, can they do it rapidly enough so that there's not a hiccup in the system? Back in 2008, during the financial crisis, some of the money market mutual funds, they broke the buck, as the term goes, meaning they were supposed to always maintain a value of $1, but the underlying assets in those that were backing those money market mutual funds fell in value such that the operators of those money market mutual funds could no longer pay out $1. And that caused absolute pandemonium in the market and caused liquidity to suck up very quickly. So now that we're dealing with roughly $100 billion worth of these stable coins and growing again, remember the trajectory that I mentioned earlier in this presentation, Washington and Frankfurt and Tokyo, all the big money centers have got to start thinking about this. And I think there's a lot of justification there, because we all know that if things really do go south quickly, who has to step in and bail out the financial system? It's the taxpayer. And as a result, the regulators are going to feel like it is their job to come in and do something. So I think you're going to see a lot more rules coming in around stable coins. It's going to be a bigger part of our life. And I think that it's going to, again, really create a much better, faster, cheaper way of doing business in the digital space. Payments are the lifeblood of an economy, of any kind of economic system. So you need well-functioning payment systems. What I believe will eventually happen is that central banks around the world will be the direct issuer of these currencies. The Fed will have a way where they can push more money onto the blockchain. We're already seeing it in China. They have gone ahead of this much more rapidly than we have here in the United States. And as I said, smaller countries like Bermuda, the Bahamas, the Marshall Islands, all of them are starting to put out their own or have already issued their own digital form of currency. China was able to do it a little bit faster than the US because of they're not as concerned with privacy with the government of China, whereas the US consumer, the European consumer, or even laws like GDPR in Europe make it very hard to issue something quickly. People do want to have some privacy around their transactions. And so if Western governments were to issue these central bank digital currencies or stablecoins today and they didn't have those kinds of protection, they may not get another chance to do it again because the consumer would not have the trust around those kinds of products and would just push back so hard that they wouldn't be released. So that is really what's going on today. Expect more regulation here at Honeycomb Digital Investments. We continue to monitor that because this is a huge trend that is going to have many, many years of growth ahead of it. We do believe that blockchain solutions are the future and payments are going to be one of the cornerstones. So stay in touch for additional insights on what is happening in this space. We look forward to seeing you on another episode.